Hello and welcome to the Mortgage Porter Weekly. I'm Rhonda Porter, mortgage advisor in the greater Seattle area, and this update is for the week of August 3rd, 2026. Last week, the Fed held interest rates steady, keeping the Fed funds rate unchanged at 3.5 to 3.75%. And while this rate doesn't directly set mortgage rates, it shapes borrowing costs across the economy. And the decision was expected, but the vote was not unanimous. Three Fed officials pushed for a quarter-point hike instead, and pointing in part to the war in Iran and then the off-again, on-again talks as some of the inflation risk they watch closely. The Fed continues walking a tightrope, bringing inflation back to its 2% target while not adding pressure to the labor market, and that's showing some signs of slowing. On inflation, personal consumption expenditures cooled slightly in June, with annual inflation easing to 3.7%. Core PCE, which strips out food and energy, also improved to 3.3% annually. Housing data remained strong. Case-Shiller showed home prices up 0.6% from April to May, while the FHFA home price index showed a 0.8% increase in May. Both point to continued momentum in home values. Second quarter GDP grew at an annualized 1.5%. This is a touch below expectations, with consumer spending, exports, and business investments offsetting softer government spending and higher imports. Octo Blue reports the average 30-year fixed rate as of last Friday, July 31st, at 6.716%. This is up from what I shared with you last week, and you can see the trend with it moving higher. So hopefully this does come into check. But do remember that this index reflects about 35% of the market, which is mortgage transactions from lenders who use Optimal Blue when they go in to lock in an interest rate. And so it is an average. We don't know how these rates are being priced, if they're with points or without points, or even what the loan to value or what somebody's credit score is, or all the factors that go into pricing out a mortgage rate. So if you would like a rate that is current and based off of your personal financial scenario, please reach out to me. I'm happy to provide that for you. It's the first week of the month, which means that it's jobs week. Markets are expecting ADP to show about 70,000 jobs created in July, with the BLS report on Friday coming in around 83,000. The unemployment rate is expected to tick up slightly to 4.3%. These aren't strong numbers, but with expectations already low, a weaker jobs numbers and data can actually help mortgage rates improve. So the next Fed meeting is September 15th and 16th. And the CME Fed Watch currently shows a 66.5% chance of a quarter-point rate hike. So we will be continuing to watch that. And it's about 10:45 a.m. Pacific time right now as I prepare this for you. And mortgage-backed securities are up slightly at 14 basis points, which is a positive sign for rates today. Big changes are here for condo buyers and owners. As of today, August 3rd, the limited review process for conventional condo loans is officially retired. This was a streamlined path used for roughly 40% of all conventional condo loans, and going forward, established projects will need either a full review or a waiver of project review. A full review means more documentation from the association, questionnaires, budgets, insurance certificates, meeting minutes, and what this means for buyers is to expect some more paperwork, more back and forth with the homeowners associations, and potentially longer timelines. If you're writing an offer on a condo, you might want to build that into your contingency timeline. There is some good news, though, that the waiver of project review now applies to condo projects with 10 or fewer units. This is up from just 4 units before. So if you're looking at a boutique building or a converted fourplex or small urban project, financing might actually be simpler than what it used to be. If you own a condo, it's worth making sure that your HOA is on top of these changes, as it could affect your resale value and limit your financing to non-warrantable financing. So I got a full breakdown on my blog, including a timeline of every change taking effect through 2027. So just reach out to me for more information. I hope you have a great week. If you or anyone you know are considering buying, refinancing, remodeling, reverse mortgage, or maybe downsizing anywhere in Washington State, even if it's months away, I'm happy to talk with you. Take care, and I'll see you next week.